Hey guys, Armon here with TSDR Trading. I was looking to make a video today, go over my trades and maybe my current thoughts on the market. Before we get started, really appreciate if you gave the video a like and subscribe to our channel. Me and Pat are talking all things trading, psychology, the trades we take, and just general trading subject knowledge. So I appreciate that. We also have a Twitter handle at TSDR_trading. Before we get started, I was looking today to trade cryptocurrency related stocks to the downside. Over the evening or morning here, China came out with some news that deemed all cryptocurrency transactions and things related to that illegal. So as we are kind of in a downtrend for these stocks, I thought there was maybe some opportunity to short them. So in my opinion, I thought Riot and Coin had the best chances of breaking down. I ended up going with Riot. My first trade on that, they kind of pushed in the morning here, but my first trades on that, you can see right here. I'll just show you them. So I took one in the morning and one here in the afternoon, well, later morning. But as it pushed, I was watching the level 2, and I could see that it was starting to stall out here around this 28 to 28, 23 level. And as I saw that, I thought that this was a good chance to maybe get in on a starter position on some weakness. So my first entry was 28.03 short with a stop above the high a day, and was really looking for a further breakdown. Really the level I was looking for to eventually break was this 26.87 pivot, and see if we can get maybe a bit of downside after that break. So as that happened, I was looking to add here. This was a mistake. I added at the lows here, but I was looking to see if we'd get a quick flush, as the tape was, in my opinion, looking like it was about to flush down. So I added, gave it a few cents, but then I covered the whole position pretty quickly here and got a decent win out of it. Would have liked to see some follow through. So as the day went on, I was stalking it, and I was looking for it to fail along the VWAP here. So it ended up spiking right here and quickly coming right back down below the VWAP. So to me, that was all I needed to see to grab another starter position and look for that eventual breakdown on the 2720s and hopefully get some follow through on the daily chart. So I took a starter on that, and we sat through it, let it play out here. It never ended up breaking down that level. And as it remounted the VWAP, I stopped where my original stop was and gave back a little bit of my profits from this original trade in the morning. And really, that was it for me for the day. You know, didn't really see the need to trade anymore. I watched the market for another hour, hour and a half. I really only day trade the first 2 hours. I'm normally done by 10:30 Central. So didn't see anything else that I liked. So I called it a day. And you know, that kind of brings me to my next point of the video, is that in my personal opinion, for my style of trading, it is a bit of a slower period in the markets for what I like to do. You know, I've really only been trading flat for about a month and a half now. You can see this is kind of my 90 days trading. So you can see right around the beginning of August here, it's kind of stalled out, and we've just sat around flat. And you know, the reason for that is, you know, I like to trade larger to mid cap stocks, and we're just not seeing as much follow through in that. And my strategy is one that involves needing a bit of follow through. I only have about a 39% accuracy on my trades, which means I'm actually wrong most of my trades. But I have a win to loss ratio of about 3.5 to 1, which means every winner is about 3.5 times my loser. So for my strategy to play out as a profitable strategy, it does require getting the follow through on some of these big movers sometimes on day trades. And it's just not something we've had the last couple months for whatever reason. So yeah, like I said, been trading flat for about a month and a half. That is okay. You know, that's part of trading. There are times where the market is more conducive to your strategy and times when it's not. And it's one of the biggest parts of trading is recognizing that, you know, people think that they can trade the same way always all year round, and that's just not true. There are times when it's going to work better than others. It is okay to not trade during these times. What's not okay is to bleed your account out trying to force trades, you know, force a square into a round hole. It's just, you know, forcing something that's just not there. So, you know, that's the difficult part, is what do you do when these times are slow, and then how do you recognize it? You know, so the first thing I'll say is, if you're not tracking your trades, you know, that's a huge issue, because it's hard to really pull that out. So I mean, this is just a small clip of it, but this is from Trader View, and that's the website I use to track my trades. I also do an Excel document that I write personally, like a journal in. But this will give me my stats, and I can see, you know, over the last month and a half, my winners are much smaller, and, you know, just in general, my trades haven't been working out as well. So it's important to keep studying that up, so you recognize when the market maybe has changed, and then you can adjust accordingly to that. So I use TraderView. There's another great website, TraderSync, you know, that's a good one that you can use as well. Or, you know, just using an Excel document if you're pretty savvy with that. But the point is to be tracking your trades, so you know when the market is not conducive to your strategy. I guess what can you do in that situation? So you say you finally do recognize that it's not a time for you to be being aggressive and taking a lot of trades. Well, there's a couple options you can do. You can take that time, if you're a newer trader especially, to study, you know, and not necessarily study looking for new strategies in the market. That is something maybe once you've really got down a strategy and are profitable doing that, you can do. But study on your own strategy, which comes back to tracking it. You know, I've spent many times where these slow periods happen, where I'll go reviewing months and months of trades, and maybe look for trends in what I'm doing well and what I'm doing bad. What should I be doing more of? What should I be doing less of? And, you know, just really getting to know yourself as a trader. That's a great time to maybe stop clicking buttons and maybe learn a little bit more about yourself. You can stop trading for a bit, just go spend some time with your family outside of the market, whatever you want to do, just take a little bit of time away. What I do personally is I want to keep sharp, you know, especially I am somebody who needs some pretty solid executions. You know, I need to be very in tune with it. If I'm missing by a little bit, it kind of just messes up my profit to loss ratio. So I trade smaller size and trade less often. So I have a note that I'm writing at the top of my watch list paper every day that says, you know, take only 3 trades max a day, which that's normally when I'm trading my best, is when I'm trading a little bit less. But, you know, when I'm sitting there taking 5 to 7 trades, which is a decent amount for me personally, in a market that's not good, that's just not the way I want to be trading. So take less trades and you can decrease your size. So like I said, and what that does is I'm not hurting myself, you know, too much as I wait for a market that's more conducive for my strategy. So I think that's just something to think about. You know, this may be a good market for you, but it's important to recognize when it is and when it isn't, and how you can adjust your trading according to that. Thanks again, guys, for watching. Please don't forget to like the video and subscribe to our channel, follow us on Twitter, and have a great rest of the day.